Are you ready to take action to attain the lifestyle of your dreams?
It's a great way to make a lot of money fast.
Hey, what's going on? Welcome back to the Clever Investor Show. I'm Cody Sperber, the OG Clever Investor, and today in the studio we got Max Jimenez back in the studio, along with a very special guest today, mini Clever Investor himself,
in the house.
my son Hudson Sperber.
What's up?
What's up? What's up?
What's up?
What's up, bro? You ever been on a podcast before?
I don't think so.
This is it.
Dang.
This is it. Hey,
It's a good one to be on too.
Yeah, we're breaking you in. Welcome to the Clever Investor Show. We're going to be talking about creative finance in this episode. And just maybe I'll even pepper you with a couple questions about being the mini Clever Investor. What's it like having Cody Sperber as a dad? I'm sure you're going to say all
filtered or truth.
All nice things on this podcast. But anyways, welcome back, guys. We're glad you're here. We've been having a lot of fun on this show. The next 47 episodes or so are going to be all real estate. We made a decision that we're going to do 50 hardcore real estate episodes.
Yeah. And I think people are loving it. I don't know if you may see in the comments and the feedback, people are really loving this content, this new approach.
Yeah. You know what? Somebody DM'd me yesterday and goes, was Robert Wensley drunk? On the last podcast we did, somebody must have thought he was. I don't know. Maybe he was. I don't know. I don't know, but he was spitting fire, so it was like, "Hey, here's a shot."
Did you give value? That's the real question. Did you give value? Yeah.
Yeah, but anyways, listen. Today I want to talk about creative finance because when I first got into this business, I wanted to be a wholesaler, right? And so I was like, okay, I'm going to go out there and I'm going to wholesale. And at the time, door knocking was really big.
Oh yeah.
And so that was like the model. We would go knock doors.
Yep.
You get a list of pre-foreclosures. Find out which ones were as close to the foreclosure auction as possible, because the theory was the closer to the foreclosure auction, the more motivated the sellers were going to be.
Of course, yeah.
And then go knock on their door. You would bring some leave behinds. That's what they called them, leave behinds.
Leave behinds, yeah.
Which was essentially your pitch.
A sticky note or some type
your
of document.
Contact information in a short pitch, something that you can leave behind in case they don't answer. Or if they do answer, you can hand it to them and say, hey, here's the 2 or 3 options that we have available.
Yep.
And I got to tell you, it's scary to door knock.
Oh yeah,
it's really, really hard.
Absolutely.
And you're telling them, I'm going to stop a foreclosure, I'm going to pay cash for your property and all that stuff.
Yeah,
it's a grind. It was a very hard business to. And that's probably why it took me 14.
Well, and especially in Arizona, right, when you got 120 degrees outside.
oh yeah, it was brutal. It was brutal. So quickly I realized, hey, I could go knock 50 doors and not get a single deal.
Yeah.
I need to have more tools in my tool belt.
Yeah.
It wasn't, and then the other thing I was doing was, okay, so I was working the pre-foreclosure angle. What about after they go to foreclosure? Where do those properties go? And they went to foreclosure auction, and there was a group.
Sale.
This is, you got to go back to 2003, 4, 5, 6. It wasn't like it is today. There wasn't all this data online. There wasn't all this information. And so there was a group of maybe 6 good old boys.
Yeah. The good old boy club.
The good old boy club. And they were gangsters.
Yeah.
And they were down at the foreclosure auction, and they were down there, and they wouldn't let anybody new in.
Yeah.
So imagine this, Hudson. I would go down to the foreclosure auction and hang out, and I quickly realized it's a bunch of mobsters down there. They're the real estate mob.
Yeah.
Yep.
And they didn't want newbies in there.
Right.
And so the way that you broke in is you bought properties through them,
100%.
or you sold their inventory. So my whole strategy when I didn't have a budget and didn't know what I was doing is I would go knock doors all day long. But then when the foreclosure auctions were happening, I would call all of the guys that were buying properties down there and say, what do you got? What do you got? What do you got? What do you got? And if they said, there was this one guy, his name was Frank. Big Cody. I got this property over in Maryville Terrace. It's a 3-bedroom, 2-bath. We paid, $48,000 for it. I'll give it to you for 55, a hot 55. You want it? You want it? Move it.
Yep.
So I would go, okay, he's going to give it to me for 55. I marked it up to say 60.
Yep.
And I would go to my 3 cash buyers that I knew.
Right.
And what I would do is I would literally fly down to the house, take pictures and video of it. And you got to go back then. There wasn't even cameras on your phones.
No.
They were pretty weak if there was.
Yeah.
And so I used this thing called a flip camera. I don't know if you remember that.
Yeah. Mm-hmm.
And so I would take pictures and videos, and I would try to get in front of my 3 cash buyers and show them
the photos.
Show them the photos. And that was a grind. And I would maybe, because by the time I got one of my 2 or 3 cash buyers to commit, the dude at the foreclosure auction, they already sold it. Right? So I kept getting the, big Cody, you're just a few minutes too late. which you quickly realize when that's your whole world and that's your strategy is just trying to like scrap for deals, that you got to have more tools in your tool belt.
Yeah, absolutely.
And my mentor, Lyle, when I finally opened up my eyes, he was all creative finance. That's all he did. And right now it's really relevant because if you look at the world we're operating in today, 55% of every mortgage in America refinanced during the refinance boom over the last 3 years.
Absolutely. Yeah.
So we're sitting on a gold mine of we're sitting on a gold mine
low interest
rate mortgages.
Yeah.
So when you show up at a property, if you only show up and say, hey, I want to pay cash for your house, you're going to get told no a lot.
Yeah.
It's going to be very defeating, especially
when someone has a 2.5 interest rate on their mortgage.
And there's nowhere for them to go, right? It's kind of hard to move right now, right? There's not a lot of inventory out there. And so we, right now we're seeing this massive resurgence of creative deals.
Yep.
And it's because all these great mortgages are out there. And so imagine if you rolled up instead of saying, I'll pay cash for your house.
Yeah.
Sell me your house with your mortgage attached to it.
Exactly.
Sell me the rate. Sell me the house and the mortgage. It's such a better pitch. And so
it is.
Let's break it down. I want to break down for any new real estate investors. Anytime you're working in the creative finance, we're talking about a handful of tools or paperwork strategies to be able to lock up properties where built-in financing is already there.
Absolutely.
So and every single homeowner that you talk to is going to fall into one of 3 categories. Either they own the house free and clear, they own the house with a mortgage, but little to no equity, or they own the house with a mortgage and they have a ton of equity.
Yeah.
And depending on what scenario you walk into will depend on which creative finance strategy is the right one to try to deploy.
Exactly.
Okay, so pay attention, Hudson. This is how it works. If I roll up to a seller and I say, hey, tell me about your situation, and they are in a place where they want to sell or they're open to selling, but they're stuck on price. They are not going to sell for 1 cent less than what they want, which is like everybody.
Yeah, right. That's 95% of the people you talk to.
Yeah, they're not extremely motivated.
Yeah.
Remember when we put you on the phones?
Oh my God. That was so fun. My dad, they gave me this website. I don't remember what it was.
It was Deal Automator.
Deal Automator. And they made me, I had my phone. It wasn't just an iPhone. And I would find these houses. I would look, especially for people with, maybe with like an overgrown backyard or, no pool or the pool's dirty or something.
They did virtual driving for $1.
Yep.
Yeah.
And I would call them and I got one person that said maybe.
Nice.
Every other person either said no, stop calling me, or just cursed me out. So
yeah. You know what though? You know what? You what's funny about that story? So you came in the office, you were hanging out, and you were like, hey, I want to do something. I want to do real estate like you. And I was like, okay, put them on the phones. You did something that I would say probably 60 to 70% of adults that buy a course never do.
Oh, that's so true.
Really think about it. Like,
that's true.
These adults are so scared to pick up the phone and make a call because they don't want to hear the no.
Yep.
They don't want to get cussed out. They don't know what happens if the person actually starts talking to them. They don't know what to say or do next.
Right.
And you got right on the phone. You were like attacking
100%. When I'm just thinking about that, I mean, a couple things that go through my mind. Obviously the reward, if someone does say yes, it's worth going through those no's. Number 2, I'm hiding behind a phone screen. I know that's not like the best thing to say, but well, hey,
but
they
you
say
are, though.
no.
Have you ever that person that cussed you out? Did you see him at your grocery store?
I did not.
Did you see him at church? There you go. See,
even if I do magically see them, the chance that they recognize me from my voice, it's not possible.
Dropping gems already, dude.
So, I mean, the reward is
you got to do it.
You got to do it.
And let me just say this, dude. You're never gonna get a deal if you don't have the conversation.
Exactly.
100%. It all starts with that initial. Hey, just looking at this property.
My dad gave me some great advice when I was probably around your age. He said, son, you're never going to get laid unless you ask.
Can't get what you can't get what you can't get what you don't ask for, right?
That's right. No, he never said that. I'm just kidding. Don't repeat that to your mom.
Erase that.
Yeah. So think about this. And so you were doing that.
Mhm.
And if there was a seller that's finally talked to you and said, I might consider selling, but I want this price.
Mhm.
And then you look it up online and you realize like that's full retail.
Yeah.
Maybe that's even above what properties in the area are going for. Right? What are you going to do?
Be completely honest, I worked for $5 an hour there.
I was paying you $5 an
I
hour.
paid $5 an hour.
This shit ain't worth it. Is that what you're
That's
saying?
what I'm pretty much saying. Like, you know, yeah.
No.
If someone did say yes,
what was
though,
your commission if you got a $10,000 assignment fee?
$5 an hour.
He's like, commission?
Yeah.
Commission. Wait, what? No, there was
So let's just say, just because like maybe you don't know.
right.
Let's say they said, hey, but I want full retail. And you went to Max and you said, Max, I got a guy. They're willing to sell, but they want like above what it's worth.
Right.
What do you think are some options of things that we can do?
Financing.
Hey.
Okay, you're
That's-
close.
yeah, we're going
you're,
down,
You're
yeah.
getting close.
Going
Yeah.
close.
Yeah. So think about it. Like,
Mhm.
so
Good.
they own a house and let's say they have a mortgage on their property.
Yes.
One of the things that Max would probably tell you to do is go back to the
Back to the
seller and
seller.
just learn about their current mortgage.
Yep.
100%.
Because what if we were able to say, okay, Mr. Seller, we will pay you exactly what you want if you sell us the house, but include the financing.
Yeah.
It's called seller participation.
Right. Yeah.
It's where it's like, hey, listen, I'll give you the full $300,000 that you're asking for the property.
Yeah.
But the reason I'm willing to do that is you're just going to have to be okay with me making you payments over time.
Yeah. Yep.
And those
Ooh,
payments
yeah.
over time would work kind of like this. You already have a mortgage on your property and you're making your payments are, let's say, $2,000 a month. I'll just step in and start paying those $2,000 a month. So
Right.
now you don't,
Right.
you're not worried about that.
Yeah.
And on top of those $2,000 a month, I'll pay you another $500 a month directly into your pocket for allowing me to do that. So even though a lot of other investors might show up and say, I'm not going to pay you $300,000, I'll pay you $250.
Yep.
I'll pay you the full $300. So you'll get the price you want, but I get the terms I want.
Yeah.
Right.
And that's the biggest thing. I think most people that are out there talking to sellers and, they're running into the situation where you have sellers that are asking for too much and they just walk away from it. And it's like the hardest part is like not being able to work a deal to its maximum potential. And this is why creative financing is really crucial and really important. And get an understanding that sellers will sell to you. You give them what they're asking for and they're going to trade. They have to trade it for time, over time, right? If I gave you what you're asking for, my pitch is usually this. If I gave you the $300,000 that you're asking for your property, right? Because that's what you're looking to get. I'm not going to be a cash buyer at that price. I can tell you right now. Right?
Of course.
There's no way I can offer you that in cash.
Yeah.
I just want you to understand that, right? But here's what I've done in the past with other sellers when I had the situation come up where you're asking $300,000. I was able to give them what they're asking for. However, the turnaround for that was they were able to give me time to either take over your mortgage and make the payments, or if it's paid off, they gave me time to make them payments.
Of course.
And the next question that should be coming out of that seller is, how much time do you need? Right? So you position yourself a little bit different, right? But most people don't do that. As soon as they hear 300,000, and there's a lot of motivation too, right? Because here's the other problem. A lot of people use this creative strategy to really convince the seller to sell them the property. Even though they
100%.
want, retail, what tends to happen is don't be using creative to convince someone to do business with. I see this mistake a lot. Use creative to make sure that you're solving the seller's problem and it's the solution that fits them. And there's a lot of benefits too when it comes to creative to the seller. I'm pretty sure we'll get into that, Cody, down the line.
Yeah. And so the best way to learn this, Hudson, is start with free and clear properties. If you're listening to this and you're like, I want to learn creative finance, the best place to start is free and clear properties. And it's really easy with a software like the Deal Automator to go on and pull a list of all the free and clear houses in a specific area. And the reason we want to work free and clear houses is if I own my house free and clear and I don't have a mortgage on it and you approach me, and by the way, I think you have an advantage. If you got back on the phones right now, being a little kid, you'd get through because people wouldn't feel like it's scary.
Yeah.
Right? You would actually be able to get some deals.
Yeah.
And let's say you got a hold of me and you said, "Hey, old man, you got this house. It's over at 555 Main Street. What are you doing with it?" And I'm like, "I don't know. It's been in my rental portfolio for 20 years." And you're like, "Well, would you want to sell it?" And I go, "Well, make me the right offer. I'll sell it."
Yeah.
You go, "Well, what if I pay you full asking price? Whatever your number is, I'll give you that right now."
Yep.
And I go, "Okay, I'm listening." And you go, "But here's the thing. I want you to be my bank. I want you, because you own it free and clear, to I'll pay you full price, but you be my bank."
Mm-hmm.
Because if you think about how to learn creative finance, it's really, when we're talking about terms, we're talking about the purchase price, we're talking about the down payment, we're talking about the interest rate, and we're talking about the length of loan. So when we're talking about terms, it's all of those things. It's like, how much am I paying? Full retail. But how much am I putting down? What would you want to put down? What's the best case scenario for you to put down on a property when you're buying it? No. If you're the buyer.
Oh, if I'm the buyer,
Just the down payment, not the full purchase.
If you,
yeah.
least is possible, correct?
that's right.
Yeah,
As
yeah,
least
there you
amount as
go.
possible.
Perfect.
You're
Yeah,
getting
yeah,
it,
yeah.
Yeah.
right? So I want to put $0 down. Hey, I'll give you the 300,000.
Right.
I'll pay $0 down.
Yep.
I'll pay 0% interest. We'll amortize it over 30 years, meaning the length of the loan is 30 years.
Yep.
You go pay them over 30 years, the 300,000.
Yeah. So
Yeah,
imagine,
yeah.
so if I go to a mortgage calculator, I like to use usmortgagecalculator.org. If I go to a mortgage calculator and I put in value, 300,000, down payment, 0, right? Which makes the mortgage amount 300,000. If I put,
Right.
let's say, interest rate, I put 0.001 because they don't let you do a 0% interest rate in a
Yeah.
mortgage calculator. It breaks the calculation. Okay. And I say amortization period, 30 years,
Mm-hmm.
right?
Right.
And I put calculate payment. Hold on, let me see. Am I doing that right? Interest rate, boom, boom, boom. Oh, 0. No, I got it right here. It's just calculating. Okay, you can see here. So it's principal only payments. 30 years. Bam. So my monthly payment is going to be $1,233 per month. Principal,
And are you
interest.
making money on that? Because you're just paying them back.
Well, I mean, eventually what the goal is to either is for you to buy it to where you're making a payment where it's lower than the like market rents than what you could rent it for, right?
Got it.
So yeah. So because you're gonna make money on the
talking
rental.
about renting,
or
not selling and resell or buying and
or you
reselling?
can assign it to a buyer, by asking them for a down payment, you sell it a little bit higher. So there's a ways you can get creative
Got
with
it.
it. Yeah.
Yeah, so the whole concept is we start with all of the terms when we're negotiating a creative finance deal, with all of the terms leaning in our direction.
Yeah.
So the whole concept is like, hey, I'll
But
give
why
you.
is that though? What do you think that is? Because we're giving them exactly what they want, right?
Yep.
Yeah.
It's price versus terms.
Yep.
So if we're going to give you the price, you're going to give us the terms. So if we turn around and go, hey, listen, we're going to put 0 down, pay you 0% interest, amortize it over 30 years. By the time you put taxes and insurance and everything in there, it's like $1,200 a month.
Yeah.
Do we have a deal?
Right.
And what if he says no?
So many of our listeners reach out and they ask us how they can get involved in my actual real estate deals. Our investment firm specializes in finding deeply discounted properties, acquiring them, renovating, stabilizing both single family and multifamily properties all over the United States. That's why we're so excited to share with you clevercapitalfund.com. Now, if you have some investment capital and you want to deploy it and receive double-digit returns backed by real estate, then visit our website and see which fund is right for you. We have both equity funds and we have debt funds where you just get paid out every month like clockwork. All you got to do is visit www.clevercapitalfund.com today to learn more.
Like I said, I get paid $5. I'm messing with
Yeah, well, think about it. Let's
Yeah.
start pulling levers. What
Yeah.
are the
Right.
levers I
If
just
there's
taught you?
Other options.
The levers I just taught you are we have down payment.
Down
Yep.
payment,
Okay.
creative finance. But we already tried that.
Yeah,
Let's-
down payment,
We have down payment, interest
Interest.
rate,
Interest rates.
Yeah.
length of loan.
length of
Got
loan.
So those are the three things: down payment, interest rate, length of loan. So
variables. Your variables.
Yes, my variable.
Got it.
So if he says no, we already know the 300K is the right price.
100%.
So now it's down. So what would you like to see in order to do this deal?
Yep.
What would make the most sense? Well, what if I said, hey, Hudson, I need at least $10,000 down.
Down. Right.
So now we would isolate the objection, right? So we would say, okay, so let me just make sure that I understand this, Mr. Seller. You're cool with everything else. The only challenge in this deal that would prevent you from okaying an agreement here today is the down payment. Is that correct? So we're going to isolate the objection.
Yep.
Right? And if he says yes, I'm going to say, okay, so everything else, I'm going to repeat it. So everything else sounds good. The 300K, the 0% interest, the length of loan, 30 years, all that. And if he says yes, now we just got to negotiate the down payment.
Got it.
This is why I like learning on Free and Clear, because there's no mortgages, there's no weird stuff you got to do with insurance and trying to like learn how to take over somebody's mortgage and make the payments and not get caught.
I want to hit on that point because maybe someone that's listening, like, what do you guys, just so they're not confused, because I love seller finance because it's a white canvas, right? Like you can pretty much come up with your own structure. Initially, you and the seller are now like becoming together, the bank, and just like the bank comes up with their own interest rate, their own down payments, like seller finance to me is ultimately like the end all and be all, just because you can create, you can do longer than 30 years if you want, right? Like you can get as creative as much as you want to when it comes to the payment, to the interest rate, all that stuff. With subject to, it's a little more difficult because what is set? The payment, the term, everything's already set because there's a mortgage in place. So for those of you that are watching, what we're talking about right now is strictly seller finance, which is your whiteboard. I love it.
Yeah, and that's why I love starting with this, and that's exactly where I was going right now. Because let's say we isolated the objection, and we knew that he's good with the price, he's good with the rest of the terms. It's just that down payment. Even with a down payment, we have levers we can pull because we can. Okay, you want 10,000 down? Am I hearing that correct?
Mm-hmm.
Okay. Well, what if I gave you the 10,000, but it wasn't immediately? What if I paid you the 10,000 on day 91? Would you be open to that? What do you mean? Well, it's going to give me time to get into the property, clean it up, fix it up, get a tenant in there, figure out how I'm going to make money from it, and then I'll owe you the money. So it just buys me a little time so that way I can make the property rent ready or get some cash flow coming in.
Right.
Oh, I never really thought about it. Okay, cool. What I'm trying to teach you here is that there's no right or wrong way to structure this. Yeah. What if I came back and said, no, I really need the $10,000 down right now? Okay, well, what if, it's because I would prefer not to put that 10,000 out. What if instead of paying you 300, I paid you 325 for the property?
I love that.
And I gave you $25,000 extra. So I'll trade 10 for an extra 25. Would you be willing to do that?
Would you do that deal? The seller is asking for 10,000.
Yeah, well, it matters how old I am. If I'm 95,
no, but listen to it.
Okay, you're getting somewhere.
There. Yeah,
you're getting somewhere.
There. Yeah.
Okay, because probably if they're older, what do you think they're big? Do you think they're going to care about down payment, interest rate, or length of loan?
Length of loan.
Exactly.
Because they're older. If I'm 60, 55, I don't want to
go 30 years in a mortgage with the guy I just met online. Right?
Yes.
Yeah, I totally get it. You're starting to pick up on this. So if that was the challenge, was length of loan, we could say something like, okay, well, amortization means how long the loan is. Right? So how many payments you make each month over what period of time. I hear that what you're saying is I'm 65. I'm not going to want to be in business with you for the next 30 years. My kids don't know what to do with this. If I pass away, I don't know what to want to leave this to my family.
Yep.
So I hear you. What if we amortize it over 30 years, but we put a balloon in there so it ballooned in, say, 10 years?
Yep.
And what that means is the payments are lowered because, remember, everything goes back to a mortgage calculator. You go to a mortgage calculator and you put in 0% interest, 30-year loan with no down payment, and you hit calculate, it's going to give you a number. And if you just start messing with the down payment, the interest rate, or the length of loan, it'll change the numbers. So we're just pulling levers. And so if we amortize over 30, that makes the payment lower. But if we balloon it in 10, that means there's a sunset on our relationship.
Yep.
I know it's hard to understand.
So what you're saying is, I'm just trying to understand this. it will continue paying for let's say the balloon's in 10 years, it will continue paying for the 10 years. And then after the balloon, the price would go up to pay? Is that what you're
Close.
saying?
Actually, what would happen is the note would just
You have
become
to
due.
refinance or sell.
Yeah. So the seller would call and say, hey, it's been those 10 years. You need to cash me out now.
So that means you got to fully pay him.
Yep, you got to
it.
fully pay.
You
I
pay the
understand
remaining balance owed. So it's like a
Alright.
payment plan that's paid over 30 years, but at a certain point, 7 years, 10 years, 15 years, whatever that
Have you
balloon
ever
is.
done something like that before with the?
Yeah.
All
the time.
Like 75
All the time.
times. Yeah.
Does it work?
It
Yeah.
works great
It works
because
really
think
good.
about it. I'm just trying to be clever.
Yeah.
I'm just trying to be clever because my goal when it comes to creative finance is to have the least amount of risk.
Yeah.
Right.
So if I'm going to trade price, you got to give me the terms. And
Yep.
so I'm always going to
100%.
fight to get the best terms
Yep.
possible, but I'm going to give up the best price possible. And a lot of sellers will justify it, especially if they're savvier, meaning that they're a investor and they have a rental portfolio of say 7 houses and they own those 7 houses for 25 years and they did all the right moves. They paid off their houses, they collected their cash flow and all that stuff, but now they're older. And then you call them up and say, hey, I'll overpay for your house. I really don't care. Just hook me up on UB My Bank.
Right.
Yep.
And then we work out all the terms. Then I get the person in every transaction that's the smartest and that's always in the best position is the bank.
Mhm.
100%.
Yep.
Because the bank doesn't care if you have a tenant in there
Exactly.
and you're collecting cash. The bank
They
doesn't
still want their
care.
payment.
The bank doesn't care if the property's fixed up.
Yep.
They don't care if they have a toilet issue.
Right.
You deal with that. The bank just gets their mailbox money. You know what I'm saying? All right.
I love it. And here's the other thing too on the buy side. So once you assign the deal or you sell the deal, the buyers love those deals because number one is they don't have to get a hard money loan, right? They just come in with that, whatever your assignment fee is on top of that. So let's say that seller wants 10 grand and you want to make a $20,000 assignment fee. So the buyer now has to come in with the $30,000 down payment, but they have going back to that 30-year term, they now can keep a property that they don't have to ever get financed on for 30 years.
Yep.
So buyers eat those deals up. And especially right now, with the way a lot of the flippers and a lot of the buy and holds are struggling with lenders, like those deals right now with the 2.5%, 3% mortgages, those are assets.
Oh, it's the gold
You know
rush.
what I'm saying? Yeah, it's
It's the gold rush.
Yeah.
So think about this, Hudson. Here, let me tie a bow on it and pull it all together.
Mhm.
We work out a deal with a seller
Okay.
that owns a property free and clear. We pay full price for the house,
Alrighty.
but they allow us to step in and they say to us, Cody, I'm okay with the 10 grand down, but I'll wait until 91 days. You have
Alrighty.
up until 91 days to pay me my 10 grand down.
Yeah.
But I'm cool with 0% interest, which means principal only payments.
Mhm.
I'm cool with principal only payments, amortized over 30 years, balloons in 12.
Okay.
Let's just say that was the scenario. And we're like, okay, we locked up this deal. It's worth $300,000. We paid full price for it. I got to get this guy 10 grand within 91 days. So I got to figure that part out, but I committed to it. But I love it because every time I make a payment, I'm paying down the mortgage. So that means 100% of my payment goes towards principal. So I'm able to build wealth faster because imagine if I'm paying something off and there's no interest attached to it.
Mhm.
All of the money that I pay on the payment plan goes right towards
Yeah.
the purchase of the house.
Yep.
Versus interest.
That's,
Right? So if
that's
you
what
think-
that's what they call the secret bank or the quiet bank account.
Yes.
Yeah.
So you're actually,
Because
a lot of times when you get financing on a property, there's some interest rate attached.
Mhm.
So let's say there was 5% interest and I made $1,000 payment. Well, in the beginning phases of purchasing a property, like $600,
Yeah.
$700 goes towards towards interest. So you're very slowly paying the house down. But if 100% of your payment goes towards interest, you're paying the house down really fast.
Mhm.
Got it.
Okay, so pay attention. We agree to the 300K. We agree to the 10 grand in 91 days. We agree to the 0% interest, and we agree to amortized over 30, but balloons in 12.
Okay.
I now have a house.
Right.
I have to make a decision. How am I going to make money from this house? So now what we're going to do, since we did creative finance on the front end, we got to figure out what are all the ways to make money on the back end. Well, if the property is a phenomenal Airbnb, we might Airbnb it because
keep it.
we can make more profit potential than just a normal rental.
Yeah.
If it has a bunch of bedrooms. Maybe it's good as like an assisted living facility or something like that. Maybe it's good as just a normal rental, but maybe it's good as a lease with an option.
Yep.
Because we have to come up with the 10 grand. So we either package it up and immediately wholesale it for say 15 grand and let the person buying it figure out what they want to do with it.
Mm-hmm.
We collect 15 grand as a wholesale fee, pay 10 to the seller and keep 5.
Yep.
That's one option. Okay. So we wholesale the seller finance deal, or we advertise around town. We put out these little signs all over the neighborhood. Rent to own, rent to own, rent to own. And we get these calls and the call says, hey, I see a sign on the side of the road. It says that you're renting to own. Yeah, we don't care if you have bad credit. We don't care if you went through a foreclosure.
Yep.
As long as you got a really great job
And a good down payment.
and a decent down payment, we'll put you in a property. And within 18 months or within 2 years, that property could be yours.
Yep.
Because you're going to rent it with an option to buy it.
Mm-hmm.
Okay.
Okay.
And just so you know, Papa, my dad,
Yeah.
this is how we got our first house growing up because we didn't have a lot of money.
Mm-hmm.
And we were renters for many, many years. And my dad met somebody that was trying to sell his house, but everybody was offering him too low.
Right.
This is like in the late 80s and the market was kind of crazy back then. And so Papa said, hey, I just got a new job and I got a signing bonus of whatever, 10 grand, 15 grand. If I give you the 10 or 15 grand, can I rent your property with an option to buy it for the price that you're asking today, but give me 24 months before I have to actually execute and buy it?
Mm-hmm.
Okay.
And so the guy let us move in for the 10 grand. We paid rent for 2 years. And at the end of 2 years, my dad had enough job history and good credit that he was able to actually get a mortgage on the property, cash the guy out, and now we fully own the house. And that was the first house we owned.
Okay.
So it's
all
rent to
making
own.
sense now. Rent to own now makes sense to me. And then what was the wholesaling finance one again?
Yeah, so we have to make choices. And once we lock up a deal,
Right.
Yeah, we have to decide
As
what
a-
the exit
as-
strategy.
we got to figure out how to make money from it because we got to pay this guy 10
Yeah.
grand
Right.
within 91 days.
91 days.
Yeah.
So we could try to market it around town, see if any other buyers want it,
Want to buy it? Yep.
right? And we could just say, hey, you can step into this deal for a $15,000 just assignment. Like you don't have to go to a bank. You don't have to get a mortgage. You literally, do you have 15 grand?
Yeah,
You could buy this
right.
deal for me right now.
Yep.
Okay. I don't care what you do with it, but I'm going to step out. You're going to step in. I assign you the deal for $15,000.
Yep.
I keep 5 and I give the original seller the 10 that I
within
own.
91 days.
Now everybody's happy. The cash, the person, the investor I sold it to got into a deal for only 15 grand out of
Yeah.
pocket.
No
Now,
bank need it.
Yeah.
Yeah.
He'll make the decision what he wants to do with it. He might turn it into a rental. He might turn it into a lease with an option. He might turn it into an Airbnb. We don't care. Okay. Everybody wins.
Yep.
Or we go, it doesn't make sense for us just to make a quick 5 grand. I think I can make more than that.
Mm-hmm.
So we put out these signs all around town. We say buy like rent or rent to own. 20 or 25 grand down gets you a house.
Yeah.
Right? No qualifying, doesn't matter as long as you got a good job.
Right.
And we look at it, we say the payments we got to make to this seller, because when we did the deal, we went to our mortgage calculator, we said 300 grand, amortized over 30 years, 0% interest, and it spit out a $1,200 payment. So we go, okay, we know with principal, no interest, taxes and insurance, we got to pay $1,200 a month for 30 years.
Okay.
Well, if we can get rent at $2,000 a month,
Mm-hmm.
we know that we can make $800 in pure profit on every time someone pays us rent. Because we collect $2,000 from our tenant.
And then you got to pay the $1,200 back
Out
to the
of
dude
that.
that
Yep.
owns the house to
Yes.
be able to pay off the
Yep.
mortgage.
Yes.
There you
So
go.
now, what if I went and I said, buy like rent or rent to own, 20 grand down,
Okay.
2 grand a month.
Mm-hmm.
And someone calls up and they say, I'm a new entrepreneur. I started a business. I'm doing really well, but I'm not bankable yet.
Yep.
If I go to a bank, the bank's going to say, do you have 2 years of job history?
Yep.
And I just started my business 6 months ago, but I'm online and I'm doing Bitcoin. I'm doing something. I'm making a ton of money, but I don't have the job history. And the bank's going to
Yeah.
go, sorry, we can't give you a loan. Come back in 2 years.
Right.
So, but then they call me and they go, I've only had my business for 6 months, but I got 25 grand saved. I'll give you 20 of it. And the 2 grand a month is no problem.
Mm-hmm.
We go, great. fill out a rental application, fill out an option agreement. They pay me the 20 grand.
Right.
They move into the property as a tenant with the right to buy it for 2 years. So we give them a 24-month option.
Yep.
Got it.
Or an 18-month option or a 12-month option. We get to decide how long they have of a period before they have to execute and buy the house.
Right.
But the point I'm making, now we made even more money because now we got 20 grand up front plus 2 grand a month. So we give the 10 to the original seller.
10. Yep.
10's in
We
our
keep
pocket.
10.
We're smiling ear to ear. We're like, dang, that was cool. Plus every month when they make their payment, we make $800.
And how quick do you think that would happen? The one where you get the 10 or 5 grand or 10 grand. How quick does that happen? Does that take like a lot of effort? Or
The wholesaling part?
Yes.
Well, what do you think, Max?
No, I think the wholesaling part, I mean, honestly, you can, on specific deals like those where you structure them that way, where the seller is the bank for you, I mean, the buyers are just waiting. They're like,
They go like this.
Yeah, exactly.
Bam.
Exactly.
Those go quickly. So this is where the struggle comes
Yeah,
in.
exactly.
Do I take the quick cash of 5 grand or do I put in a little bit more work? It might take me a month to pull this off.
Yeah.
But on the other end of it, I get 10 grand plus 800 bucks a month.
You might have to wait a little bit of time because like maybe 90 days or whatever, right? To you put the signs out and all that. So you'll have to make the payments for those 3 months out of your pocket. So you have to think about that as well. But on the long run, you get 10 and you get 800 every month for the next, whatever, 24
And
months.
Max, what happens? How often does somebody actually execute the option within the 2 years?
Man, like 1 out of 10, maybe.
Okay, 2 out of
And
10.
when it
1 out of
does,
10.
do you want them to or no?
Well, you want them.
You want
of course
them
you
to.
want them to. Yeah,
'cause
you
they-
want.
Yeah, you want them to.
If anybody gave you 20 grand, you want to see them win.
Yeah.
But the reality is a lot of people get 18 months in and you check in on them like, how's things going? You're paying me rent every month. Like, everything good? Like, oh, everything's
Yes,
good,
forget.
but I'm actually going to be relocating to another state now.
Yeah.
And you're like, oh, well, best of luck to you. See you
Yeah.
later. Or, hey, my business fell apart. I went and got a full-time job and
Yeah.
I'm just doing that.
And then, sorry, for the example you gave the person moving away, you own the house now, right?
We've
Or does the-
always owned the
We've
house.
always owned the house.
Because we're
Okay.
just renting
That's
it to
the-
them.
That's
Yeah.
the one thing I was confused
Yeah,
about.
you're just renting to them with the option to them to buy it. And what that
Alrighty.
and how they're secured in that option is the down payment.
All
So
right.
your dad doesn't go and try to option it with someone else.
Yeah.
Okay.
So it's still legal doc.
Yeah. So we have a agreement that you're renting it and you have the right to buy it for a certain period of time.
Right.
But let's say they don't execute the option. And at the end of the 2 years, they say, hey, Hudson, thanks for giving me this opportunity, but I'm not gonna be able to do this in time. You, as the investor that put the deal together, you can do a couple of different things. You can say, hey, well, how much time do you think you need?
Mm-hmm.
Well, I might need another year.
Yeah.
Okay, well, listen, why don't you give me a $3,500 a year extension fee and I'll extend you for another year and I'll bump your rent from $2,000 to $2,200 a month. And we just keep going. And at the end, we'll give you another year.
Especially if they're good paying on every single month, the 2,000.
Right.
You
So
know,
I
it's-
just made
yeah.
another $3,500 plus now I'm making $1,000 a month
Yeah.
in pure cash flow. Wow. Or I can go to them and say, man, that really sucks. Unfortunately, you got to move out.
Yeah.
And if they move out, guess what I do all over again?
Get another tenant in there. Or is it tenant, right?
Yep.
That's the right
For now,
word.
yeah.
Get them in there. Same thing. You know,
Repeat
rent
the process.
to buy.
Yeah.
Yeah,
Yep.
another option, another 20 grand,
Yep.
and now I'm making ridiculous returns.
option.
Okay. Oh,
So wait,
and
hold
if, by the way, one more thing. If they stay, I might say, hey, listen, because you've been such a great tenant, I want to, what's your challenge? Well, it's just my credit. Okay, let me get you free credit repair.
Mm-hmm.
And I've done that for people before where it's like, okay, we're close. Let me hire a credit repair company and see if within 6 months we can get you credit repair. You want to do everything you can on
I
your
was
side
just
to
gonna
try to
say
help
that.
them out.
Yeah, I was just gonna say that you want to be as fair as possible and help them out as much as possible because at the end of the day, you have their down payment. I mean, obviously, there's still an agreement no matter what. So the agreement is you were gonna buy this property at month 18. But also, it's like, okay, I made these efforts. So when you do decide not to extend and kick them out, I did everything possible for them. Yeah.
And then connecting to that, why wouldn't we want to, after that 2-year mark, why don't we want to kick the tenant out to make another easy 20 grand?
It's not that we don't want to.
Right.
It's just there's always a fine line
Is loyal.
between making money and being ethical and being a good human being.
Good human
exactly.
So you got to like walk this line. It's
Loyalty.
like, now let's say they've missed a bunch of payments over
before.
the course of the
Yes.
2 years,
Oh, yeah,
and
yeah.
they're just
Yeah.
really struggling even making the payments. It might be better for
To
all
release
parties
them,
to
yeah.
say, listen, you can't afford this house.
Yeah.
Right.
It's better if you just go.
Yeah.
Yeah.
Now, when you put down an option to buy a piece of real estate, that is a non-refundable payment
Mhm.
to the investor for the right to buy the property. It's not really a down payment. It's not being credited towards the
It's
property.
almost like a fee.
It's like
Yeah,
a
it's an
fee.
option fee.
It's called
Yeah.
it's called the option price. The legal term is option price.
Right.
And so when somebody pays you an option price of 20 grand, that money just goes right in your bank account. And that it's just for the rights to buy the property
Right.
whenever the for whatever length of the option. So yeah, we do probably mathematically want them to move out and move somebody in and do it all over again. As a good human, we want to help them in every way we can to get it done.
And I guess there's a certain point if you have a bunch of these houses, there's a certain point when you won't be, needing
You don't
that
need
extra.
the money.
Yeah.
Yeah. Well, I mean, at the end of the day, this is our community. This is the
100%.
market we're working in.
Yep.
100%.
You do a good job with a seller or a buyer or a lease option tenant, they're going to turn around and refer other people to you.
Right.
Yep.
This is why you always got to play the long game, dude. I've seen so many people
Absolutely.
come in this
Yeah.
industry and they're cutthroat and they're sharks and they're kind of like that. They're new, right? And they're so hungry to make
Yeah.
money and they're so aggressive that they miss the bigger play. The bigger play is to build a brand in your local market as a real estate expert that people could like, know,
Yep.
and trust, that bring deals to.
Yep.
My mentor, Lyle, do you remember Lyle? I don't know if you remember. You were really little.
I was so, I mean,
You were little. Lyle, the guy who taught me the business, he was like right away, he goes, Cody, there's going to be people that are going to sideline you. There's going to be people that are going to bully you and push you around and pass you over. And they're going to be cutthroat and they're going to cut you out of deals. And they're going to sue you and they're going to lie to you and they're going to steal from you. And I was like, damn, like I'm like a new green entrepreneur.
Right.
And I'm
Yeah.
like, this sounds horrible. Like,
he
why
doesn't
would
want
they
me to do it.
Yeah. And guess what? Everything
true.
he said was true.
yeah.
Everything that he said was going to happen happened to me.
It is.
But he said on the other end of that, he said, but Cody, if you rise above all that and you always play the long game and you protect your brand and you have integrity and you do what you say you're going to do, on the other end of that, all those people will be coming in and out of the market.
Mhm.
They'll be going bankrupt because they're going to burn every relationship. And we know some of these people in our industry. There's like a blacklist
Absolutely.
Yeah.
of
Yeah.
guys like John May
Yeah.
that are out there that nobody wants to do business with.
Yeah.
Right.
And they don't even know it, or they pretend like it's not. No,
Yeah,
people
there
talk
is a
about
blacklist.
bad about
Yeah.
you.
Yep.
You know, I'm throwing some names out there because you can't be
No.
awful to people
Right.
and expect people to go to bat for you
100%.
and be there for you. And that's why investors get a bad rap sometimes.
Yep.
It's because they're too cutthroat and too sharky.
Right.
Yep.
But we don't got to be that way. So help the person, and if they bow out after we tried everything, game on. Let's go
Yep.
get another lease option tenant.
Yeah.
Let's go get another 20K and do it all over again.
I'd like to talk a little bit about how you see all the scenarios that happen, right? And
100%.
the money you're making
Yep.
monthly, the down payment. But that would not happen if you did not get this deal under creative terms,
Correct.
right? We go back to your calls, and now you got people that want, so much money, but they need to sell, but they won't go lower than that. And all this that we just talked about would not happen if you don't get it under creative terms. Yep.
Yep.
Right.
So we start with free and clear properties, and
Yeah.
then we move over to properties with mortgages on them.
Yeah.
And there's two different creative financing strategies that we focus on if there's a mortgage in place. One is called a subject to transaction. One is called a wraparound mortgage. They're almost identical concepts,
Mm-hmm.
just different paperwork,
Yeah.
right? So if you have a mortgage on there and you have a 3% mortgage, I don't want you to get rid of that,
Yeah.
Right.
right? Because if you think about a $300,000 property,
With a 3% mortgage, low
Yeah.
earn.
Yeah.
It's an
And
asset. It's right now, that's like gold mine. It's a gold rush.
Because the mortgage rates at right now are
Yeah,
aren't
six,
they
seven,
at
six,
6,
six,
7,
six,
yeah.
7%. It went up to 8 earlier, but yeah,
Whoa,
think about that.
Like a year ago when it was almost 9, right? Wasn't it like,
Just recently, yeah.
yeah.
yeah. So if you put in a $300,000 mortgage at a 3% interest, amortized over 30 years with property taxes of 1.0, Yeah, your monthly payment is $1,264.
Yeah.
Right?
Yeah. It's low.
Yeah.
So
And rents, I mean, anywhere right now are going to be somewhere 1,500 and up.
Right.
It's 1,500 on a low end place.
yeah, so right away we're going, ooh, that's gold.
Yeah.
And that's really the gold rush right now. If I was an investor and I was working an area, I'd go, okay, I need to teach myself very quickly how to do a sub-2 or wraparound mortgage,
Mhm.
how to do a seller finance, and then how to make a cash offer.
Right.
Those are the
Exactly.
3 kind of basic tools that you need to have in your tool belt. And a subject to and a wrap is essentially this. We're going to come in, we're going to make you an offer to buy your property as long as you leave your mortgage in place.
Yep.
We're not calling up the bank. We're not saying, hey, we want to qualify for a mortgage. Can we assume this mortgage?
Yeah, we're not assuming the mortgage because a lot of people confuse that. Like even like newer people, are you assuming the mortgage? I always get asked like, no, we're not assuming the mortgage.
Yeah.
Which means that we're taking the mortgage from their name to our name, right? That's the mortgage assumption, but we're not doing that. It's staying in their name.
Yeah, and there were some mortgages like back in the day, like VA mortgages, where you were able to kind of call up the bank and, take over somebody's VA loan.
Got it.
We're not doing any of that.
Yeah.
Alls we're doing is saying, listen, we're going to step in. You're going to deed the house over to us in a sub-2 transaction. That's how it works. You deed the house over to us, but you leave the mortgage in place. I'm going to make your payments every month. Imagine how scary that is for a homeowner
Right.
that just met you
Yeah.
on the phones. You're like, wait, you're just going to make my payments? Like, how do I know you're going to make my payments?
But I want to make
But
a
you
point.
also like my social security number with that too.
But I want to,
Yeah, exactly.
But I want to make a point on that because we don't want to scare these newbies. Like the reason why someone would do that is because of the motivation, right? What's their motivation? Is it distress or is it gain, right? Distress, they're hurting financially, personally, emotionally. Gain, they might have to relocate, right? New job opportunity. That's the reason why people would do that, right? Trust
Right.
someone to be able to take their mortgage over is the motivation. Then what I said earlier when we started, it's like most people use these creative structures or these creative strategies to convince someone to do the deal because they won't take a $300 cash offer. And that's kind of why what you brought that up, where like they got to trust you.
Right.
Got to build
Oh, yeah.
rapport. You got to
100%.
that motivation's got to be there.
Which is the hardest skill to learn is how to build a relationship with somebody
Mhm.
that you just met over the phone
Exactly.
that you maybe never see in person ever.
Mm-hmm.
Right? This is why we do all kinds of tricks. First off, we never tell them, this is what we want to do. Do you want to do with this?
Yep.
No, it's, hey, listen, here's a bunch of your options. In fact, do you want to pop over to a Zoom call real quick so we can see
Right.
each other? I want to go through some things.
Yep.
Right? We're always just trying to break down the fear barrier and the walls by saying, hey, I'm just a normal person. I'm on your side. Hey, I can make a cash offer. It could look like this. How does that feel? Right? Oh, okay. So that doesn't feel good. Like, what if we did this? What would that look like for you?
Yeah.
100%.
Right? We just keep throwing out different options and scenarios. And before you know it, they're like, well, tell me more about that. How does that work?
Yeah.
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 Right? Well, it would work like this. Like, you're going to, we'll take over the property, but we'll leave the mortgage in place. We'll make your payments every single month. In fact, I can even hop into your online banking, put my bank information in there. So the payments are made like automatically every month. It just pulls the cash
Yeah.
right out of my bank account, goes right to your lender. They pay everything gets paid, and then you get a receipt of it. And if at any point in time you want to log in and see that the payments have been made, you can log in and see that the online payments were made.
Yeah, that's why when I talk to our team or training our team about pitching a creative deal, whether it's subject to seller finance or even innovation, right? Because I clump that in with like creative, right? Because you have to
Right.
be creative with it. It's like the way you're gonna pitch this is you first, because you're always gonna start with the cash offer, and you gotta move that seller away and unplug that seller from the cash offer, and then say, hey, even though I'm not gonna be your buyer at the one lump sum, we do have another solution that we've helped others when we're at this point right here. Would you like me to tell you about that?
Right.
That's how you get someone to say, yes, tell me about creative, right? And like, perfect.
Yeah,
Here
who's
how-
going to be like, no, I don't want to hear anything about that. That sounds awful.
Yeah, well, no, but the thing is like, all right, you know what? Well, the cash offer doesn't work. Well, you mind being the bank? And the seller's like, what
Yep.
just happened here, right? It's take away what you've been doing for the last 3, 4, 5, 6, 7, 8 phone calls, and then present this new solution. See if they'll be open to have that conversation, right? And
Yep.
then boom, you position yourself and you negotiate even better.
Because how great would it be if we can go out there and get 10 houses
Yeah.
in the next 12 months,
Right.
where the seller sells us the house, they deed us the property, we control it, but we leave the mortgage in place, where every property pays us $800 to $1,000 in pure cash flow.
Right.
How many of those do you, if you had 10 houses making you $1,000 each
Oh
per
my
month, that means you got 10 G's a month coming in.
Ooh-wee. What would that do for
Yeah,
you?
what would you do?
What would
How
you
many
do, bro?
video games would you buy
What would you do with
gems
that?
and shields and widgets on?
Dude, don't even get me started.
What's the game you're playing right now?
Rust.
Rust?
Rust.
That's the
That's
Interesting.
the game.
Is that what
That's
you
the
played
hit
too?
game.
yeah.
That's the hit game.
He told me the other day, he goes, Dad, how much do you think I spent on Fortnite up to, was it Fortnite
No,
or
it was
Roblox?
Roblox.
Roblox, okay.
How much,
Even
this-
though I stopped playing that recently, I was going through it, just seeing my
how much did you spend? Like 3 G's or something?
Ooh-wee.
11 grand in the past year.
You spent $11,000?
$11,000.
What if a house paid out that?
Here's what's funny about
It's Sperber's like, what?
Oh my God, I want to die right now. You spent $11,000.
Can we stop the podcast?
Yeah, you know what's crazy about this? You know what this little bastard did? He memorized my credit card and debit card. He
I
saw
can
it
see
one
that,
time,
dude.
and he memorized it. No matter
Instantly.
how many times
Dude,
we
he's
change
good.
it.
I heard him on the phone with his homie, and I'm like, oh, dude's good.
Jeez Louise.
I wonder where he learned it from.
What's it like being my son?
Dude, I'm scared to grow up because of how amazing it is. And like, of course, you've been doing these things where like you show me what it's like in the real world, you know, where, you know, people aren't, of course, as fortunate. It's not like I chose, you know, I was like, oh, I want that
Your
dad.
little sperm didn't swim
I
faster
was
knowing
like,
that that's
one.
going to be my dad.
Yeah. But, you know, I'm very fortunate and I have
Right
a
on.
great memory.
I have a great
Oh,
memory.
does that mean you're going to take care of me when I'm old? Are you going to wipe my butt?
Ooh.
No,
Dude.
he's back out.
No, dude.
Are you gonna run the football further down the field?
That I will do.
I hope you do.
Good job.
Are you
bro.
gonna become a what do you want to do when you grow up?
I actually want to be a pilot. I love airplanes. I love the science behind them, aerodynamics. But
A very good friend of mine
that's
is
dope.
a very good friend of mine is a pilot for Delta. So if you ever want
yeah,
to know some,
but
yeah,
what I want to do, because I want to make money. I want to make
Yeah, of
more
course.
money than what a pilot makes.
Yeah.
I want to be able to buy a jet and rent the jet out as me flying it, because I want to fly a plane.
Yeah.
That's what I want to do. But
Okay.
I also want to be able to make money.
Okay, so that's actually dope because then
you can
they
also
rent,
sell or finance a jet.
they rent
100%.
your jet and then they pay you to be the pilot. And
Exactly.
now you get to,
Not only are they paying me to rent the jet, they're also paying me to be a pilot.
Let's go.
can I be your business partner? I like this.
You'll buy the jet?
I'm not gonna. Well, depends on my cut.
Ooh.
How about we put?
How mu-
How about we get on the phones and you close some deals?
$5 an hour.
Dude, we'll give you 5% commission. No, just kidding.
Yeah. Well, listen, I've been working his mindset since the
Oh,
day he
yeah.
can even understand and
Oh, you
process.
can tell. Yeah.
How many
Good.
times have we gone out of the house on your way to school? And what do I always say?
Be humble. That's like and be a leader, set a standard. Those are the three things
I
you
love that.
always say.
Yeah. Yeah.
Hell yeah.
Well, I mean, I think it's important. See, I fucked up one day. I went, yep. You
go
begged
ahead.
me. You begged me to do
You
what?
say you wouldn't wipe him, so now he's going to
Okay.
tell
Yeah,
the
you
story.
begged me
I
to do
begged
what?
him to pull up in the Lamborghini that he owned. And I want to remind everyone, I don't have $1 to my name. So I'm just kind of taking the blame off me a little bit. But I wanted my dad to pull up in his Lambo that he had. And it kind of ruined my reputation at school because people knew I was well off at school, but like I think after that
They
they were
see it.
getting jealous and like
Oh yeah,
Yeah.
there's people in life that won't be happy for you. That's
no,
absolutely true.
and after that, I mean, and what was that? That was sixth grade. My
It
beginning.
might have been fifth grade
fifth
or
grade?
fourth grade.
No, it was fifth grade. My entire sixth grade year, purely because of that, it was bullying and all that stuff. And then I moved into a new school for middle school, and it got a lot better. But my smart ass thought it would be funny to, be the class clown and all that stuff, and that kind of ruined my reputation again. Through those 2 years, it was a lot better.
So not the
than-
Lambo, you did it to
Yeah,
yourself.
I did it to myself. And then now I'm in 9th grade, and it's been amazing. I mean,
Let's go.
because around 8th grade, the end of 8th grade, I really
Yeah.
You learned.
matured,
You learn,
learned. Yeah.
What's the best thing you like about being in 9th grade?
Ninth grade, periods are a lot shorter.
Okay.
But they have or how do I explain this? So in middle
Pop
school,
quiz. Do they even have those anymore? Pop quizzes. You remember those?
Oh, yeah.
not really actually.
Yeah.
In middle school, the periods were 1.5 hours, but we only had one elective
it's
each
longer.
day.
It's longer in middle school. Yeah.
And now in high school, we still have 6 periods, but they're an hour long. But we have a 40-minute lunch and another elective, so like culinary or wood cutting.
You should seller finance the time with your teacher.
Look, dude, you know what I love about this conversation right here is you had to learn a very valuable lesson about your reputation.
100%.
Going through that because look, how I screwed up is I fought it. I said, no way, because I knew kids are brutal.
Yeah.
I was like, no way am I pulling you up in the Lambo. Like, it's just not worth it.
Yeah.
But you wore me down, and it was like, it was like the end of the year, so it was like it was like end of a quarter or something. You're like, I did so good. Like, come on, it's just down the street. And I only dropped him off at the bus stop.
And
so it wasn't even at school. It was I drove him
Yeah.
across the street from my house to the bus stop, like a 1-minute drive in a Lambo. But as soon as we got out, this guy, and I said, listen, dude, you got to be humble. You know what he does when he gets out?
Yells.
Pulls out. He's like, hey, who's here? Hey. And he's like big swinging. You know what?
Yeah.
He's strutting. He's looking at the girls. He's pointing at them like in slow motion and stuff. Kind of looking at the other guys like, what? You ain't got this? Like, it's my Lambo. He's doing the it's my Lambo dance. And I'm just like, in the car, I'm just like, oh my God, this is not going to go well. And it flayed his reputation, of course.
Yeah.
Nobody, here's the thing. People, and this just sucks, but it is what it is.
Yep.
Everybody, even the people that love you, want to support you, but they really don't want to see you doing that much better than them.
Yep.
Because your raising of enthusiasm, your raising of your intention, your elevating of your game and your income and your skill set and your energy and your attitude and everything, like as you move up the success food chain, you're going to meet new people. You're going to outgrow old people. You're going to think about money different. You're going to think about society different. You're going to think about rules different. You're going to think about everything. Your whole psychology is going to change. But the old people, they're not there yet. All you're doing is reminding them of their own shortcomings.
Their insecurities.
Their insecurities. So it sucks because everybody that I know has to go through this evolution where it's like they start off and they think, well, I would never act like that if I had money. I would never be that way. It's like, okay, we'll see.
Yeah.
You know, and as you become more and more successful, you realize that people that are super successful, they don't have Lambos and flashy stuff. They're wearing jeans.
Yeah.
And they do have a private jet. They got real money. They got private banking relationships that they don't go to the normal branch. You know, I'm talking about people with hundreds of millions of dollars.
They got that. They got that platinum MasterCard. You know, the one when you hit it.
Oh, they got better than that.
One.
There's this black.
There's probably one you can't.
There's this palladium.
Yeah,
theirs is definitely not platinum.
Yeah, no, it's a black.
But it's funny because when I first started making, like, let's say I made my first 500,000 in a year, I thought I was balling.
Oh yeah.
And then I looked across the street and I saw the millionaires and how they lived, and I was like, oh, I wonder what that's like.
Mm-hmm.
And the next thing you know, I go over and hang out with them and I realize, oh, they kind of watch different shows and they listen to different podcasts and they act a little different and they all have cool watches and cool cars and stuff. So I go, then I made my first $1 million and I bought the watches and I bought the cars and then I looked at the people making $2 million a year or $3 million. And I'm like, oh, they take lots of vacations. They do this, they do that. So then I went over to their house and I saw how they lived and I'm like, oh, I'm going to go figure this out.
Yeah.
You do realize that every new level is a different psychology.
Right.
Every new level is a different way of operating. And eventually you outgrow all the bullshit along the way. And you realize the Lambos don't matter. All the luxury crap doesn't matter. All you do is build yourself this luxury prison that's very expensive. And prevents you from doing the one thing you should be doing, which is making money, living below your means, and buying as many cash flowing assets as possible. And as long as it's the right asset, like commercial real estate,
100%.
like the building we're in, you don't pay taxes.
Mm-hmm.
So if I make $10 million,
you don't pay tax.
You don't pay $1 in taxes because we bought the right assets with the money.
Yeah, the assets is what avoids you from paying the taxes.
That's when you finally start becoming wealthy. The difference between rich and wealth is time. Rich people make a lot of money, but they live a luxury lifestyle and they are always on the hamster wheel, even if they're making $1 million, $2 million, $3 million a year.
Right.
Because that money, it's based around they always have to replenish it because
Yep.
it's based around them spending it so fast on their lifestyle. Wealthy people parked their riches into the right assets to buy time.
Yeah.
And once I got that, I was like, oh shit, Lambo's got to go. That's why I said. That's why you're always like, Dad, when you can buy another cool car? I
don't even think my favorite part about the Lambo was the car. I think it was the car shows that we were able to go to. 'Cause I like cars. I love cars.
Yeah.
Probably.
Me too.
But you know
And-
what's cool at
yeah.
your age, like actually recognizing that.
Yeah.
You know that? Like, because there ain't too many 14-year-olds that are out there that are talking like this, right? And
Right.
it's part of your teachings from your dad. But I love that, just hearing you say that, like, that was my biggest mistake, and I learned my lesson, and that you should applaud yourself for that, because that's huge. Yeah.
And the be a leader part was always like, look, dude, I can only carry the baton so far.
100%.
You got to run it down. You got to run this football down the field.
Yeah.
A lot further than and it's your obligation.
Yeah.
My dad handed me what he could.
Yeah.
Our parents do the best they can with the information we have and the resources we have and the environment we grow up in. And we fight hard to get out of that. But then at what point did we do as good as we can? And now we hand it off to you.
Right.
And so I hope, first off, thank you for being on this podcast.
Yeah.
Yes, sir.
It was kind of cool to have a different
This
dynamic.
is so cool. Like,
You want to
Liked
do
it?
another one?
I'm down to do another one. I thought this would be like some boring old one. Like,
Come on, man. You're with your dad and Max.
I
Really?
know.
It ain't
I
gonna be
think-
boring.
yeah, no, this was really cool. And I liked how we were able to talk about multiple things. Because I know
Yeah.
some podcasts, they talk about the same thing over and over
Yeah, those
again.
other lame ass podcasts
Yeah.
out there, not the Clever Investor Show.
Oh, yeah.
But
By the way, subscribe.
yeah.
yeah.
But I hope that you do learn some lessons about leadership, because you're the next gen that has
Yeah.
to come up and set a standard. And I
100%.
guarantee none of your friends are talking about assets. None of your friends are talking about how do I get a seller to give me their house on terms so I can create $1,000 a month in cash flow and 10 grand in my pocket immediately.
Yeah, no, they ain't talking about.
No, we're in the real leagues
Yeah,
over
exactly.
here. And but if you find a friend that wants to start a business, if you find a friend that is trying to light up, don't be
Yeah.
that hater, be
Yeah.
that cheerleader. Be like,
Lift
man,
them up.
I think that's amazing. Let's talk business.
Yeah.
You got to be standing on business.
Standing on business,
All right.
man. Guns and butter, baby.
Yeah. Hey, listen, if you made it this far in the podcast, I want to give you something for free. Go to fliphousesbook.com. It'll teach you the wholesaling process that we talked about in a lot more detail. There's a free training class that comes along with it that will really explain everything that's in the book.
Nice.
I've given that book out over 100,000 times. People rave about it. I think it'll really help you out. Go to fliphousesbook.com. Grab your copy today. That's all we have for you. Thanks for hanging out. If you got some value from this, make sure you share it with a friend. And also, we'd love to get some positive reviews from you guys. It's your way of giving back, just kind of letting us know that we're on the right track with the show.
100%.
We're out of here.
go.
Until next time, take care. Comb your hair.
Sperber's out.
Peace.
Hey, Cody Sperber, the original Clever Investor, host of the Clever Investor Show podcast, and I'm shooting this ad right now to let you know that this podcast exists. It's finally out, and we have some amazing guests. So please, I'm begging you, can you just come and give our podcast a listen? I've been doing real estate for a really long time. I've accessed some of the coolest people in the world. We were having all these amazing conversations, and I'm like, what are we doing? Let's record this and actually put it out on a podcast. But the problem is, I have to let people know about it. That's where this ad comes in, and this is where you come in. You're going to be able to learn from successful entrepreneurs, get in-depth interviews from amazing leading experts. You're going to learn real estate investing strategies and tactical trading strategies that work in today's market. We're going over market analysis and different market predictions. You're going to be able to engage in an awesome community. And we go into some pretty deep dives on the mindset of what it takes to win the game of money and in life, plus lots of bonus resources and exclusive content. So what you're going to want to do right now is click the link that you see on your screen and give the show a subscribe today. We have amazing guests like Ken McElroy and Robert Kiyosaki and Wes Watson and Pace Morby and Jameel Damji and Vina Jetty and a whole host of amazing men and women entrepreneurs that you're going to love to learn from and get to know. So what you want to do right now is click that link and give the show a subscribe today.